Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. So in the midst of a Fed rate cut and a relatively surprising result on Super Tuesday, we're all kind of trying to find our footing here this morning in the market, and we'll talk about the reaction to both of those events. We also have a number of earnings, a number of ratings, and our guest today is Ivan Feinseth from Tigress Financial Partners. He will join the show at 8:35. We'll also take some questions from the chat as always. Joel, what's the word here in the overnight session?
A lot of green on the screen here, Spencer.
Yeah.
We are trading up 64.5 handles at 30.6150. Pre-market low, 76.50. They tried to press it through Tuesday's low, which was 29.73, and the bulls said no, 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 and low was 76.50. On the upside, we hit 30.74. Don't have much up there, folks, but for the remainder of the day, I'll be keeping an eye on Monday's close. That was 30.65. That was the high of the rebound. So far, we hit that and fallen back. Crude up 76 cents at 47.94. Gold, 1650 seems to be a hurdle again, up 230 at 1646.70. Silver up a little bit more on a percentage basis, up 3.2 cents at 17.22. And Bitcoin, low volume, low action, up $20 at 8,790. So Triple D, are things calming down over there?
It's calm, a little calmer right now. We've calmed down a little bit last night. Wasn't as crazy of action either. We did bounce around a bit, but we're not moving around 1,000 points overnight. So it's calmed down a bit, but we are up substantially here. And what do you think?
Catalyst.
Super Tuesday? Super Tuesday, I would think, is the catalyst here with Biden gaining some ground.
Let's bring in our political reporter for this analysis.
Oh, is that me?
Yes.
Yes. You're a
Okay.
political reporter.
Joe Biden is now in the delegate lead after last night. He won 10 states in Super Tuesday. Bernie Sanders appears to have won California, which is the biggest prize, but Biden, who was hanging on by a thread there for a moment, did not look good, is clearly back in the race. Actually, you could say he's leading the race until they call California, really. And so he swept the South, and it looks like it's a two-horse race now between Biden and Bernie.
And Wall Street applauding that. I mean, the last thing Wall Street wants is Sanders. So anytime Sanders, and not that he completely faltered here, he gets California, that's huge, but he's not running away with it now. And Biden is back in it. And that's why the market is rallying substantially here this morning. So for one day, we're not moving on coronavirus. I mean, there's still coronavirus affecting it all. Don't kid yourself here. But I think the main driver of today is Biden pretty much victorious here on Super Tuesday. I'll say it.
Yeah, I guess it's official now. Coming over from across the border there. I guess
the Canadian talking about U.S. politics.
I guess it's the ABB, anyone but Bernie. Show.
It is. They do not want Bernie. I don't want Bernie either for my job. He's going to totally attack Wall Street. He's going to attack us. He's going to attack traders. So, I'm happy too for Biden.
I think it's going to come down to running mate, who
it will.
Yeah. Yeah.
Is there rumors on anybody on either party? Because now
I have turned it down. I'm not getting involved in politics this year. There's just too much going on.
You're not even going to get involved at all.
There were reports yesterday that Bloomberg's aides were trying to convince him to drop out ahead of yesterday and
join up with somebody.
Join up with Biden.
Yeah.
He didn't do that. But it's not a stretch to say Bloomberg could drop out and join.
It looks like Bloomberg's out of it now. Like, it looks like it's down to two people.
Right.
You can safely say it's a two-horse race.
Yes, and it wouldn't surprise me if if Biden were to like choose Bloomberg, so many B's, as his
Too many B's.
Yeah. So,
You know what? I'm gonna throw something out here from one of my sources,
okay.
and I can't
You have
reveal my
sources?
because if I told you who the source was, then it would be your source, and it wouldn't be my source. Okay,
All right. So don't tell me the source, but what is your source saying?
Stacey Abrams.
Joel, get out of here.
Okay, I'm just telling you what one of my sources said.
All right. Let's bring it up.
Let's go back to the markets.
Yeah, bring it back to the
Do you know who she is?
I
Dennis?
don't know.
She's a politician from the South that barely lost. What was the Georgia election?
She couldn't win her state election. So,
So I don't think she's
okay.
going to be the running mate.
yeah. All right. Moving on here away from that. As Dennis said, market's relatively calm, but were you guys surprised by the reaction to the rate cut yesterday?
Yes.
We were on the phone together.
I mean, it couldn't have got a worse reaction. So here you are, the market's down slightly. We're down about 25, 30 handles. And the Fed obviously didn't like the pullback in the markets. They were ready to strike on any pullback, get a little pullback, and out of the blue, I mean, we knew they were going to cut. We just didn't think they were just going to come and do it yesterday. I mean, we knew where it was going to be at the meeting, for sure. It was just a matter of when, not if. But anyways, kind of out of the blue because I don't think anybody expected it at 10 o'clock yesterday. And boom, rate cut. S&P futures algos rip it higher.
Oh,
News
man.
algo rips it up like 70 handles on that. Get up to basically, where do we get to, Joel? We were talking about it.
We were on the phone.
We were on the phone when this happened. We were talking.
You just got off.
We're like, what happened? I was like, oh my, they cut 50 basis points.
And you mentioned 312. We did the spider and we did the S&P, and I had 3125.
That's a 50%.
And that just goes to show you that having orders out there. Yeah, you could have gotten. You can also get picked off, but there wasn't even a shot for me. It went up there, it hung for a little bit, but then you're thinking, oh, I'll catch it when it comes back down.
Yeah.
But it came back down and went back up, and then it was out. So, those are kind of things where you have, and I've stressed this on the show so many times. If you're doing this kind of trading and you have like these wild targets, these wild levels, better for targets, stick them out there because you never know. You never, ever, ever know when you're going to get done. And that one of those instances where you would have gotten done, and you would have had, would have taken some heat, but 12 handles in this market. I mean, holy Toledo, that's
nothing.
much.
That's like a tick. So again, 50% retracement just comes into play. We talk about, it's the only fib number we use. I say if I write my technical analysis book, it had 4 pages: support, resistance, trends, and the 50% retracement. And unbelievably, we get up there, we kiss it for about a minute, and then we just collapse. And we're within 15 minutes, we're red, and we continue to go down throughout the day, giving it all back, end up down Dow 700 points because it sounds nicer to talk 700 points with the Dow. That's the only time we use it because it sounds like such a big number. But it couldn't have been a worse response. So Fed not getting the response at all. With that being said, it's a nice pop, a nice Biden pop here this morning. What are you doing? Like, I mean, I'm very torn on this market. It's a hard one. It's a hard market to call. I know you bought some puts, and then you were saying, well, with the 50% of the 50%.
I know.
Well, we got there yesterday too, right?
Yeah, it saved my ASS.
So tell us about the 50% of the 50%.
It was 29.90.
And where did we get down to?
We got to 29.73.
So right there.
Yeah. So another, and then Lisa was gone for 5 days. I said, I told her, I'm going to get you at the airport. I'm going to get you at the airport. And I'm just looking, and it's going like 29.90, 29.10, 29.90, 29.15. And I'm like, you know what? I was able to sell the lower strike for, quite a bit more than I paid for my position. So I'm just like, okay, I'm just going to, and Nick has talked about this too, locking it in.
Yeah.
So, yeah, I'm going to get a little, I would have been better off just covering that area, but I'm locked in. I'll be, very, very negative red on the position. And I don't think I'm going to try and leg out of it, because you know what happens when you lift one leg. And
So what do you have? Which strikes do you have
I
now?
went way out of the money. I went because I only went 2 weeks out. So I went like the 300s and the 299s or something like that. I don't have that platform up, but you want to exit. But on the other hand, you're thinking, what if you have a big down opening tomorrow? So I think I paid like 260 for like the three, maybe there were even lower strikes than that. Whatever. I think I paid like 260 and I was able to sell the other ones at like 550. So, I could just let them expire. Plus, only going out 13 days, you told me on the phone, you're like, man,
got to go out of ways in this.
Yeah.
That's how we got burned the first time. Obviously buying a lot of puts, playing the coronavirus. We had puts on LUV, we had puts on the SPY, and we just didn't go far enough. And I missed it by a week on the LUV. I got bailed out because I actually had that first day of the big down move on the 24th of February still on my SPY.
Yeah.
So that salvaged my SPY puts. But the LUV ones, I mean, if we would have went out 3 weeks, we would have made a lot of money on those. So it's all about going out further. That's why my second leg of insurance, I went way out to June. I don't want to play games with it. So I'm very torn on this market. I mean, you think about the potential headline risk here, and it's enormous because, you listen to Scott Gottlieb, he's on CNBC all the time. You listen to a lot of other academics and, doctors in this case, and they're saying this thing's going to spread. And you got to think that you start seeing schools closing. I mean, we saw a school in New York yesterday, but if you start seeing mass school closings, you start seeing people nervous to leave their house, it's got to impact the markets. And I think that's going to happen. I'm not saying, like I said, I don't think we've got zombie apocalypse happening. The death rate on this thing appears to be pretty low. So, but if it's enough to spook everyone, that might be enough to bring the markets back down to those lows. So it's hard to just jump in. Like, part of me says, oh, I've got a lot of cash right now. I raised a lot of cash, obviously, before the fall, which we had talked about. It was 3 weeks early. But again, I was selling up at 325, 328 SPY. We're 300 for SPY. So they're good sales right now. I eventually need to get these stocks back. These weren't like, this wasn't trade. This was long-term investment stuff going on. So I do want to rebuy some of the stuff that I sold. It's just a matter of timing it. And I don't think the bad news is all gone here yet. I think there's going to be more headlines. I do think we're going to eventually retest the low, and I would not be surprised if we take it out. So that's why I have not lifted my hedge, and I also have not bought back any of the stocks that I sold in my long-term account. I'm sitting with a lot of cash, but I need to eventually buy it back. I hope I don't miss it.
Stock Hands mentions the jobs number on Friday. I mean,
we got an ADP number coming out too, and if you want to just skip that, I think that's coming out in 30 seconds.
Yeah.
Every number actually, I think, is more important now.
They're all important right now.
Yeah.
They're all important. So
will this number reflect? I don't know how much is going to reflect of the chaos, though. You know what I mean?
Yeah, but people want to be reassured. You're right. It may not reflect the chaos, but people want to see good. Okay, let's make sure the economy is still on solid ground. That's what they want to see. So I would think every economic data point from here.
I think so too. I think they're all important, right? We're going to find out right now. I believe it's 8:15. Isn't there a number?
Well, we've sold off about 30.
Am I wrong with the 8:15?
Yeah.
We didn't move.
Is it?
I thought there was a number coming out today. Yeah, ADP just came out. Okay, well, they don't care. We're saying every economic number is coming out. ADP just came out and increased by 183,000 jobs in February, private sector, and then went crickets. We didn't even move a handle. So.
Yeah, we did back off from the high, pre-market high, 30.74. Could we have? When's the last time we had an inside day? I know I've said that a few times.
Well, we're due for one. I'll tell you that. We're due for an inside day. What we mean by an inside day is obviously inside the high and the low from the previous day. We're due for one, Joel.
If we take out that low, holy mackerel! I'm taking out tomorrow. I'm taking tomorrow off. But yesterday,
we could do anything. We're getting a nice lift, but after yesterday, here you are. And if you were to tell me that, we're going to be trading around 306 on the SPY and they're going to cut rates just out of the blue by 50 basis points and we're going to close significantly red on the day, you'd say you're nuts. That's exactly what happened. There's not a lot of times where the Fed comes out of the blue, cuts rates, and we go red. I mean, we do go red sometimes on these, rate cuts when they're known, but it's it was early. I mean, and it was a gift to the markets. Again, it was expected. So you can't just say it was completely out of the blue. It's just the timing was out of the blue. So, but the initial lift, the news algos who bought that just got crushed again. So you got to watch. Don't chase in this market. That's what it's teaching you again and again and again. This is a market that you get punished for chasing in. It seems like you get a second shot. If you're coming in and buying, the SPY when it just rallied 200 or if you're talking the futures, when we just rallied 200 points, you're doing it backwards. You got to be buying when it's going down and selling when it's going up. Fading. The fade trade has been on, and it really in the last 2 years, the fade trade has worked better. I mean, yeah, we had a little run there towards the end, but if you really put it in perspective, let's look. 2018, we were 292 on the SPY. Here we are a year and a half later, and we're right around there too. If your fade moves, you're making money.
Boom. I wasn't going to say, well, we were kind of poo-pooing the rate cut, and I just, have different friends that have kids in different industries. And one of my buddies had
friends, Joel?
Yeah, besides you and Spencer.
Are we your friend?
Co-workers. One of my buddy's sons works in the mortgage industry, and he had like a half a dozen deals fall through last week. And, they were sizable deals. And I think people were just, I don't want to build a new house. I don't want to buy or something. And I think now, like, those people are like, whew, rates are coming down. How can I refuse? So
Yeah.
I think it was, who knows how long it takes to cycle all that through the economy and what it does. But, it was a boost to people that, in the housing market, psychological, a lot of different effects to that. So it was a surprise.
I'm not surprised this deal's falling apart. I mean, there's going to be a lot of issues here. Like you were saying even yesterday, Joel, even if it's stopped right now and, we got it contained, there's still obviously going to be cases that we find after the fact because there's people walking around with this that don't have it. But there's been some damage in the short term to this economy. I mean, China's been off the grid here for better part of 2 months now. And you've got problems in Italy. You've got problems in Iran, major problems, it looks like in Iran, with even some of the leaders getting it here now. France looks like a problem here. North America is going to be a problem too. Do not kid yourself, guys. If I tweet something about this, people keep throwing at me, oh, we have 100 cases. We have 6 deaths or 8 deaths. We're in great shape. It's not the facts, guys. The reason we only have that many cases is that we aren't testing. They're going to start mass testing. Scott Gottlieb said towards the end of the week, the test kits are coming out. They're going to start testing more people. And when they start testing more people, we are going to find more cases and we are going to hear about more deaths. There could be people dying actually right now from this, just getting in, and they think it's just the regular flu, but it's not. So until we start mass testing, you're not going to see the cases really climb up. And that goes for Canada too. Canada has only been testing travelers from China or related cases. US is the same thing. So once they start testing more people, there's going to be more cases. And that's why I don't want to own this market right now, because I don't think the market has a price in.
And then something to keep in mind is that the World Health Organization low-key increased the coronavirus death rate.
Yeah,
right?
I saw that.
It's now,
what did they say?
It's now 3.4% globally. And that accounts for, countries that don't have healthcare quite up to what we do.
So we might be in better shape here.
Right.
At the same time, we were scared when it was 2. If it's over 3, this is very scary. So again, if it actually holds and it's over 3,
right,
that's scary. Like I just think about the repercussions of that. If you have millions of people, let's just say this really does spread and 50 million people get in the US. Well, at 1%, you're talking 500,000 deaths, but at 3%, you're talking 1.5 million deaths. Now that's significant. That's scary. Influenza, yes, kills 80,000 a year. It doesn't kill 1.5 million. So, the arguments all along that people say, oh, this is just like the common flu has, it's been shown that it's not. I mean, look at what's happened in China. You don't, take the precautions that they did by quarantining, basically the entire country. And spraying bleach everywhere and doing the things that they've done for the common flu. It's not the common flu. Scott Gottlieb has said this is not the flu. it is more significant than the flu. Yes, it's a very, it's got a lot of, it's very similar, but with that fatality rate higher, that's the scary part. And if this fatality rate continues to climb, because like I've said all along, I mean, the way they calculate the fatality rate is just stupid. They take the current cases and divide by the deaths, but people aren't dying the day they're diagnosed. So I said you should really look back to, if they're dying 2 weeks into the disease, well, you should look at the cases 2 weeks ago. Or, another way you can look at it is how many people have recovered, and look at it that way. And you always got a higher fatality rate when you looked at it from that perspective. But if that fatality rate starts going up over 3% and we do not get this contained, this market's going to be substantially lower.
All right, let's do some stocks here. Let's talk about some.
It's a stock show.
Individual stocks. Yeah, let's get some charts up on the screen.
Well, we had GE come out this morning. People like to trade GE, even though it doesn't move that much. I like to trade GE. They came out and kind of reaffirmed guidance here this morning.
They did. They reaffirmed their industrial guidance for the quarter. They did say there will be a negative impact of $300 to $500 million on their free cash flow, but in terms of earnings, it's still going to be where it was before. And
the big thing that they all put in the footnote now, GE says COVID-19 is not included in the outlook.
No.
Every single earnings call now includes that footnote. Read the fine print. We're comfortable with the guidance, but that excludes anything from COVID-19. So it means your guidance is useless.
It said beyond Q1, and we're in their Q1 right now. No, I'm sorry. My mistake. So I misread that. So right. So it's for Q1. So it's for the upcoming report. So anything beyond the upcoming report is not accounted for.
So stock chart here, Joel. I mean, charts are tough in this market because so much headline risk, but we had a big candle yesterday, 1067, 1138. You're sitting in the middle of it here. I mean, I think you kind of go with the winner. You start going above 1138, starts getting interesting from the long side, starts going below 1067, starts getting interesting from the short side. And I don't know, maybe we're going to have an inside day here too, but they did have guidance, so maybe you can move it back. Tough chart.
Yeah, even for a little measly old GE. I mean, you got, this is, the two lows are pretty close to each other, right? 1076 and 1067. So you have an out, right? Maybe even, if you think, that upgrade, you think everything else is fine and dandy, you're buying it here at 11 sticks, even give it to like 1045, because there's institutional bids all the way down. There's just the way they trade this. So you have an out on the downside. And then on the upside, I see the 1134 and the 1138. That's a pair of highs. Yeah, I'm sure there's a zillion at 1139 and 1140, but above that area, I think your range traders might have some fun in this one today. I'll give those parameters. I think there's still a big old gap in this one though. From one of the earnings reports, it's still tried to didn't get into that gap that was from November, but definitely finding support here. GE, a little bit of a range. Maybe if the market goes range bound, this will go range bound.
I want to look at some healthcare stocks because they're all moving this morning on the Super Tuesday results. UNH,
big time.
UNH up almost 9%. Cigna's up. Anthem's up. The whole sector is up this morning.
Yeah, huge moves in these expected. Obviously, these were going to be attacked by Sanders. So, and maybe that's why the weakness yesterday ahead. Obviously the weakness was the overall market, but I think some of these things were even more relatively weak when you look at UNH. So Biden's victory is putting a charge into all of these stocks. UNH is up 9%. CI is up 8.45%. Big components of your trading ETFs. XLV is a pile of these in there. That's why it's up 3.2% here this morning, more so than the overall market. So just keep that in mind for you ETF traders out there that it's loaded up. But you think about all these stocks and Anthem, ANTM. So all these stocks are up this morning because of Biden.
Keep your eye on the pre-market highs. See if that pre-market high coincides with a daily high. I'm just going to do this on UNH since there's so many of those stocks. 287. You've backed off here just a little bit. And what do you have here? Yesterday's high. Nope. I have to give you a sell zone on this one. 287 pre-market high, and then your high on the 24th was February was 288.99. So there's some nice targets for you on the upside. I think over the years, when you see this kind of stuff and you have big declines and then you just get like a one-time whoosh back up, a lot of times it's a good opportunity to fade it. And it all depends what your position is, what your long-term frame is on things. But
it looks like a fade to me too. I'm on the same side as you here.
Okay.
I look at the UNH chart. I see all kinds of overhead supply between 280 and 300 here. Lots of, for 2 months, a trade up in this range. It got up there yesterday and sold straight off. People are like, gift, thank you. So I would not surprise in the least if you see some profit taking here in these stocks. CI is the same story. I mean, 200 to 220, a trade there from December to February all over the place. So you get back up now at 205 right in the middle of this range. I think there's profit takers.
All right. Is there any other healthcare ones that we want to look at?
Well, Anthem, CI, you can look at WellCare went off the board. I forgot that got taken over. So I used to trade all this group a lot. I haven't done it as much yet. I mean, you can also look even some of like the CVS Health, WBA as well, all having a pretty good day.
Centene CNC is up.
CNC, that's another one too. That's direct play, CNC.
Yep.
The healthcare providers are all up.
Yeah,
Again,
just keep an eye on that opening print. Look to follow through the pre-market high, and boom. Then look for your daily highs that coincide with that.
Jump over. We had the last big three of the three, Nordstrom, Macy's, and
we did.
Nordstrom reported it disappointed the street. JWN is trading down here in the pre-market. First, the reaction to Kohl's, which was incredible. I mean, a dog is a dog is a dog. And if you're coming in and buying Kohl's up 10, 15, 12% on those numbers, which were okay yesterday, you're doing it wrong, because what's in favor when it bounces is usually a sell. And it was a sell literally right from the opening tick. And I know it was trading. How high did we get pre-market Kohl's yesterday, KSS? $42. Gift. It was a gift.
42.88 actually. I remember that.
42.88.
Mm-hmm.
Wow. So anyways, with 37 here now, you can forget about everybody who bought that thing got suckered in the stock again. I mean, the guidance wasn't that great either when we really put it in perspective, 420 to 460, and think about what they're going into. I mean, this is still, we've talked about travel stocks, being a COVID, obviously concerns with all those stocks like your cruise lines or airlines, even Disney and the casinos, the retailers too, your traditional retailers, because if this thing starts to spread, people aren't going shopping at Kohl's as much as they were before. So you got to think about traditional retail being hit by COVID as well. So 37.42, they came in as a selling opportunity, got 42.88, closes down. It's red. Hard to get interested in this name. I know the dividend is good. I know they raised the dividend. They said a lot of things right. 7.5% now. At some point, maybe there's a buying opportunity here, but this sector is just so out of favor. There's so many better places for your money than trying to call a bottom in retail.
Whoosh down to 36.58. That took out the three lows in the 37 handle, closed 37.43, trading up in the pre-market. I don't know. I think you go back down, you still find some buyers in this one. You got three lows within the same area. So now instead of leaning on the low of the move, 36.58, I'd play it, we're 75 cents above 37. I think you still got to call 37 a significant level. Boom. When the last time we've been down in this area? Not for a long time, but overall trend 36. No, there's nothing. 37, just keep it on. If you're looking for a swing trade, maybe risk a stick here and maybe make two on it. Or if you get lucky, it starts to turn. It's something you can move your stop in. But the trend is definitely not your friend in this one.
And then for Nordstrom.
Yes, sir.
Yeah, which was the one we reported.
Right. For Nordstrom here, yesterday after the close, the earnings per share missed, the sales missed, and they gave guidance that we can ignore because it does not reflect anything about coronavirus.
Again, same story. Do you think people are going to go to the malls as much in a month? I don't think so. I think this is going to start spreading in the retail, and obviously the consumer's going to get spooked there too. So I don't want to own retail stocks right now. $25 was the low of the move back in August of 2019. I don't know if we're eventually drifting down to that level, but that level's a hell of a lot better than 30.60 in my opinion.
Let's see here. You did have a spike in JWN down to much lower than this, down to 29.50, and we rebounds and just kind of hanging here. So I think you get back down and maybe call it 30. Well, what was your low of the move here? You've been under 30 a couple times, 28.51 and 29.90.
Your pacemaker's going off, Joel.
Yeah, I know. I'll take care of it here. Yeah, it happens when you get old.
He doesn't even know what to say on that.
Hey, pacemaker. All right. Moving on here.
Defibrillator. Hold on. Clear. No, let me put a stop.
You need it in this market, man.
Clear.
I need a pacemaker in this market.
You know what I was just gonna say, and this is totally out of context here, but what a deal Tomlin shareholders got. Holy moly.
Bailed out.
Oh my God.
Unbelievable. I still can't believe that they actually, who was it that acquired it?
Was it SPG?
Was it SPG?
Yeah, I believe so.
And they're being punished for it. And they deserve to be punished for it. The stock's been straight down. What a I don't know. That was a crazy purchase in this environment. In a retail environment that's been in the gutter forever. I mean, you go and pay that kind of premium for TCO, nuts.
Yeah, look at that stock since they did. What day did they do the deal, Spencer?
A month ago, and SPG actually rallied on it that day, and we didn't get it at all. I mean, now you look at it, and obviously market effects here too, but down.
It was February 10th, so it was 3 weeks.
They got a nice dividend, 6.77%. Simon Property Group. I don't know, 190. The trend's not your friend here at all.
Unbelievable. Where was this thing? On February 10th, it closed at 143.08. It's lost
nice
20
point
bucks.
haircut.
I mean, I'm happy about it because, it's a local company, Alfred Taubman, Michigan grad, Michigan-based company. So I'm sure it bailed out a lot of shareholders on that one. I mean, they still way off the all-time high. But just speaking of retailers, I mean, I never went to malls before. So, I mean, I don't know, unless I had one item specifically that I needed. But sorry for that little tangent there, Spencer.
A lot of tickers coming out of the chat here. I want to go Virtue Financial first. I do own this in my long-term portfolio. It has had an incredible run. I'm back in the green in this thing after being down significantly. This is the run. This is the volatility play. If you're wondering why this is going straight up, it's high frequency trading firm. They make more money in these markets, just like I make more money in these markets. They make more money in these markets too. When the volatility goes up, they're going to be making more money. So this is a play on volatility. It always goes up when the VIX goes up. With that being said, also, I don't think that they want Sanders either. So I can't see that result really hurting it here this morning. But if volatility continues to be escalated, the stock could continue to perform. It's been a nice run, though. So you start thinking, you get up to 22. I'm not trying to call a top, but I guess I am. $22 would be a little bit of overhead supply. You're starting to run into overhead supply issue here. It's been a good move.
Yeah, it has been one hell of a move.
Yeah, I'm more inclined to eventually ring the register on this one, I think, as opposed to jumping in now. But if volatility escalates, it'll continue to climb. VIX starts to come back down, this will come down. This is a VIX play.
2061, yesterday's high. But look at, Spencer, can you show the daily up from the end of September? Mid-September. Look at all those highs: 2048, 2064, 2064, 2094, 2070, 2049.
You're trying to talk me out of the stock right now.
I'm not trying to talk you out of it. I'm just giving you, there was resistance in this area back in September there, and it stopped there yesterday. So if anything, it's just not going to, I don't think it's just going to blow through it, especially with all these people that have been scooping it up since that time, right?
There's some people up some money in this now.
A lot, yeah.
This is a VIX play. It's just a play on the VIX. So if you bring up the VIX and chart these two things against each other, you will definitely see a correlation there. So it's a conservative VIX play.
All right, let's bring on our guest today, Ivan Feinseth. He's a partner and CIO at Tigress Financial Partners. Ivan, good morning.
Ivan, can you hear me?
Ivan, you're with us.
Yes, how are you?
We got him.
How are you?
Good. How are we doing, Ivan?
Very good, especially that we're going to see a huge open again this morning.
Well, yeah, that's what we've been trying to kind of wrap our heads around here is what is your take on this market? It seems like, Super Tuesday, coronavirus, Fed, whatever, we're just kind of trying to find our footing here.
Well, the Fed rate cut, while it came as a surprise and was so large that it could have maybe appeared to be desperate, but I was a little surprised that they did 50 basis points. I would have thought they would do, 25 and see if you need another 25. But This just shows to me, I've said that Powell is the most market-friendly Fed I have ever seen. I mean, I know everybody loved Greenspan, called him the maestro. Powell is the maestro.
Well, he's scared of Trump too. He's a little. It seems like he's a little bit scared of Trump.
I don't know if he is. I really think that President Trump in public says, "Jerry, I want lower rates. You got to lower the rates." And in his office, he goes, "Jerry, you're doing a great job. Thanks so much for the rate cut."
Probably.
I appreciate it because Greenspan used to say his job was to fight inflation. Powell has said, "My job is to keep this party going as long as possible and as far as possible." He has said he's committed to keeping the economic boom going, to keeping the market going. I mean, you can't, and he's been pretty clear. He's also, very clear in his, press conferences and his addresses to Congress, and he says he wants to get in front of every possible problem. So he's increasing liquidity here.
All right. So that being said, will they lower again when they meet?
I don't think so because, the one problem is on that 50 basis point move is, when you're dealing with less tern 2% to start with, you don't got much to work with. Not like back in the day when Greenspan was up at about 8%. Then you got a lot to move. And Bernanke then, moved rates down significantly during the crisis. So, Powell, he doesn't have a lot to work with, but he does well with what he's working with.
Is there a chance they go negative rates?
No, I don't think the Fed goes negative rates. You could see, in theory, the market go negative rates on the short-term T-bills. I don't think that happens. And I know Trump wants negative rates because he said in Europe they have negative rates. I want negative rates. It's actually not a good thing. I mean, at some point, negative rates is a sign that there's a major problem. So you really don't want negative rates. I would say, President Trump, you really don't want, be careful what you wish for. And the flip side is the clarity in the election now is that, it's going to be Biden versus Trump. I had originally thought from the very beginning, almost a year ago, it would have been Biden and Warren. You would have had Sleepy Joe and Pocahontas, which Trump would have loved. But I think Warren's very poor performance and the fact that she didn't carry her own state kind of eliminates any possibility that she'll be potentially Biden's vice presidential candidate. I think the ticket could be Biden-Harris or Biden-Klobuchar.
A couple of people are in chat. I just want to take it back to the interest rates for a second because the banks got rocked yesterday. Obviously, they don't want lower rates here. We get the 50 basis point cuts. They got hit pretty much right off the hop. And a lot of the banks have now given back, and I mean given back their entire rally from 2019. And a lot of these had really good rallies in 2019. You look at Bank of America in the last basically 3 weeks, we're down from $35 to $27. You look at Citigroup, it's down from $80 down to $66. Are these, and people are asking in the chat, are at some point in time you look and you think, wow, these things are cheap from a valuation perspective. Are they cheap or do they get cheaper?
No, they are cheap. And what banks need is a positively sloped yield curve. We don't really have that right now. Well, it's with the rate cut becoming more so. It's only slightly positive. You got the 3-month at 85 basis points, and you got the 10-year at 1% and the 30-year at. So it did steepen. Banks make money on the spread, not make money on the absolute amount of the rate.
Yeah.
And banks make money now so many other ways with fees and other services. So I think my favorite bank right now is Citibank. My second favorite bank is J.P. Morgan, only because
Would you be a
Jamie
buyer at
Dimon
these
is
levels?
Absolutely. I'd be a buyer of Citibank, JP Morgan, and Goldman Sachs. So my two main financial service choices are Citibank and Goldman Sachs, but I also, of course, love JP Morgan because everybody loves Jamie Dimon. He does a phenomenal job. And the yield and the dividends are incredible. You got over 3% on Citibank, and I think you have almost 4%. Holding on JP Morgan. The yield on JP Morgan is 3% on both. 308 on JP Morgan and 321 on Citibank.
We're on the line with Ivan Feinseth, partner and CIO of Tigress Financial Partners. Ivan, I think part of the reaction yesterday, you had the pop off the rate cut. Is this a financial problem here? I mean, is this something that what's going on, what's stymieing the markets now is, something that country hasn't faced in a long time. So throwing money at it is nice and it's cute and it, gives the market a pop, but this is not a financial problem.
Well, I mean, there's panic. This coronavirus has caused a panic. And I've said, nobody makes money panicking, but it is a panic, even though if you put it into perspective to the coronavirus cases and deaths versus just a traditional flu. The average people, you get 48 million flu cases a year and about less than 20,000 deaths. We've had 90,000 coronavirus cases known reported and a little over 3,000 deaths. And you could say the percentage of deaths, I mean, it's much more fatal, the coronavirus, but we actually don't have accurate reporting of the coronavirus. It could be much more, bringing the fatality number down lower. But you've had Tuesday, Target was was planning to have their analyst meeting at the New York Stock Exchange live. They canceled the meeting and went to a webcast. NVIDIA was hosting a developer conference at the end of March with an analyst day around the conference, and they went to a online conference, and they postponed the analyst day. Google has canceled its May scheduled developers conference. There's been a lot of conferences and events that have been canceled to try to minimize travel. So unfortunately, the travel stocks have really gotten pounded, including the cruise stocks. So this, in theory, in the near term, could take a toll on the economy. You have many companies bringing down expectations because of the coronavirus. I believe this will pass, though, and I think this is a buying opportunity. I'm sorry. Go on.
What about from any of the stocks in your coverage? You cover some video game stocks, some media stocks, or tech stock, not really video game stock, but tech stocks, a lot of consumer stocks. What have you heard or seen from any of the companies in your coverage that maybe wasn't already out there?
Well, as expected, they are all concerned over negative impact and have brought down expectations, especially the cruise industry. I think things like Norwegian Cruise Lines, it was doing so well. It was almost $60 a share. It's down to $36 a share. I think that's a screaming buy. The cruise industry, Norwegian just launched their newest ship, the Norwegian Splendor. It was the most expensive ship ever built per berth. It's an ultra-luxury ship, and still the Regent Suite on the ship, which goes for $11,000 a night, is booked until almost the end of the year. So even if you wanted to go on the Regent, stay in the Regent Suite at $11,000, you couldn't do it till next year.
Ivan, would you go on a cruise right now?
Oh, absolutely. I'd go on. I'll tell you what. I would go on a cruise almost anywhere, and I would fly on a Boeing 737 MAX to get there.
Economy's going to keep going with Ivan here.
Absolutely.
I think, obviously they've priced in an epic disaster here in these cruise lines. And if this does pass, these cruise lines, I agree with you, will be a buy. It's just a matter of when it passes, the timing of it, like how quickly this passes and how long. Like I know Kramer, he says, when the CMG he said this on Mad Money last night, when it had the E. coli and the confidence was down, it took 18 months. I don't know if there's statistics behind that or not, but we're a long ways away from 18 months on this COVID-19.
Well, I can give you some statistics.
Oh, excellent. We love numbers.
Okay. So 7 out of the last 11 epidemics, including things like H1, SARS, MERS, what have you, 7 out of 11 times the market was higher 3 months later. 11 out of 11 times the market was higher 6 months later. The situation, while very unfortunate with Chipotle, took longer because it was a specific reason that they had to come up with a specific solution to them where the negative impact of the hit to the market has not lasted. It's recovered in a relatively short period of time. And while we're probably ways away from getting a vaccine on the coronavirus, we are heading into warmer weather, which does help. So spring is on the way. And like Chauncey Gardner said, in being there in the spring, there will be growth.
All right, Ivan Feinseth is a partner and CIO at Tigress Financial Partners. Ivan, as always, thanks for the time and the insights, and we'll talk to you again soon.
Thank you.
All right. 8:46 here. Is it still quiet out there, relatively speaking? Dennis?
Yeah, I mean, we're just chopping around a little bit, trying to find our footing. I think you're going to see some extreme moves here. Like, and you know, you can always look at the pre-market and stuff moves around in the after hours and pre-market, but really the big money comes in after 9:30. So you get a feel for it here, but we're going to have some big swings here today. Don't be surprised if we could end up giving this back. Don't be surprised we turn around and just start ripping here. I tend to think we might come back in a little bit, but I don't know. I would be looking, if we did come back in, as yesterday's lows, as maybe as a trading opportunity there. You get anywhere near 298, 299, 300 on SPY. If that's to happen, to scenario analysis, I think you'll find buyers there. And on the same story, you get anywhere near yesterday's highs. I mean, it's a long ways away. I don't think you're gonna, but think about even where we were before the Fed cut with 309, 310. You probably find sellers up there too. I think there's a lot of overhead supply here when you start getting up to the 309, 310 area. I don't think we're ripping higher. I don't see the catalyst to really rip us higher. I mean, unless you think the vaccine is going to come sooner than expected, and they're saying, you know, it's 3 months away from trials, and, you know, probably 6 months to 9 months away, maybe, or maybe even longer, 12 months away from having any use to us. I mean, it's going to get worse. I mean, it's probably going to spread in the short term, and it's probably going to get worse. Is that all priced in here? I don't think so. That's why I'm more of a seller of the rip. So I think today is another gift, just like I said yesterday. I said it yesterday on the show when we were trading 309 SPY. I was like, if you were long on margin, I'd be looking at this opportunity to lighten up. If you wanted to lighten up, you had a great gift yesterday. You're getting another gift here this morning. So there's lots of chances. So if, you know, this thing does continue to go down and starts to get ugly, you had a lot of chances to get out. I'm comfortable with where I'm at. If we were to fall 20% from these levels, I'm comfortable with my current holdings. If we're to rally from here, I'm obviously going to regret not buying some stocks, but I don't think we're ripping higher.
I think you have underneath demand too. I really do.
A little bit. You get down in the 290s, you do.
Yeah, because I think bulls and bears are kind of
battling.
They're scratching their head right now. You know, the bulls thought woohoo, man, we got the rate cut, boom, 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 and the bears battled back and they got it back down under 3,000, and maybe we'll just maybe just 3,000 to 3,100. You know, pick your poison. I mean, obviously, I like to lead on double bottoms here. And you do, based on the 24-hour market, you do have a double bottom above the low. You know, we've made 4 higher lows in a row here, or 3 higher lows. Let me go to the chart. So I just think people are I just think there's, you know, it's a good market now because there's indecision. Bulls are trying to figure out what the hell to do. Bears are trying to figure out what to do. You got your 200 points above the low at 28.53 and a quarter. No one got a shot at that 28.89 and a quarter on Monday because it was in the after hours, and then 29.73, 29.76.50. I mean, 3.5 points. I'm not going to squawk it. Not call that a double bottom. So I think we got a range. Hopefully we found a range.
Barry in the chat's asking, why is MasterCard trading up $8? I mean, it's just up 2.8%. It's a little bit higher beta. So it's kind of in line with fair value, really. When you're talking the SPY is up 2%, MasterCard will always be up a little bit more than the overall market. But what a ridiculous open yesterday in MasterCard. And the stock opened way too high. It opened up, I believe, I'm trying to grab the opening tick. It opened right at the highs. At like 3-4, I think it opened right at the high
An opening tick.
314.59. It was just like ridiculous. People just got to get in there. I own MasterCard in the long-term portfolio, but that was way overdone. I mean, we were up slightly in the overall market. Well, actually, we were down for a bit, and then MasterCard opens up $6. And obviously in the markets, we saw those buy imbalances. Those ended up working out because we were down about 20 handles. And I said on the show, I said I wouldn't be surprised if we go green before the open. We did. I made some money because of that, just looking at the imbalances, saying we're probably going to open higher.
Yeah, you did. That was a good call.
Yeah, but MasterCard opened way too high. Apple opened up $5 too, way too high. These stocks opened at the opening tick and then tanked. So again, you look at MasterCard now and you think, okay, you get 305, 306, you got people that want out. So overhead supply issues in MasterCard too. I am talking, that's my book. I do have this in my long-term portfolio, but I've had it in there for a decade. I'm not selling it. I think path of least resistance for a lot of these stocks is still lower.
Man, on this one, I mean, if without splitting hairs, you're still not too far from all-time highs in this one. Like I know you're not considering selling it, but I mean, I think on a percentage basis, this thing is held up fair. I mean, at $300, I think it's held up pretty well. Looking at the range from yesterday, wow, we're trading up 8 sticks. How's that with the market? The market's up 2.7. It's up a little bit more.
That's
than
right,
the market.
but it has a higher beta. So
yeah, okay.
I trade so fair value. This is my specialty, guys. Fair value.
Yes,
so
sir.
Stocks are trading. MasterCard's got a little higher beta. If market's up 2%, MasterCard's usually up 3%. It's right in line. Visa, same story, 2.68%. A little bit higher beta. AMD, I often say, this type of market's a little bit different there. It often is over 2 times as much, but it's not, holding to that right now. A lot of the correlations are dropping a bit just because all stocks seem to be moving together here right now. I mean, I look at my screen right now. It's incredible to look at it. I've got about 200 stocks on my screen where I can see what they're doing. The only stock besides obviously there is some other smaller companies that are red, but the main stock out of like S&P components that's red is Nordstrom. Everything is green. UNH is up $27, Joel. UNH is up $27, up 10% now. That's talking about, and maybe it gets overdone, but you get near 300, it's gonna be a short opportunity here. I'd love to see it go up another 10 points. I'd try to short it. Trying to call the top. You look at UNH on the 300.
Okay.
Look at all those highs in the chart.
Boom, boom, boom. Going to University of
This sets up. I mean, I've
it's
lost a lot of
opening
money
into
trying to
that.
call tops, but I'll call top on that one. I'll try it.
And you got a gap to fill. Get out there at 297.75, Dennis, because 97.89 fills. Wait, did you have a gap there?
Yeah, you do. Yeah, I see this gap you're looking at. 298.61. So 298. The Biden pop is overdone on these, in my opinion. I think when you look at these couple, a week later, I think that's going to give some of it back. But these things can go, and you got to be careful. Anything a trade, have your contingency plan too, as if it doesn't work out. Let's go a few tickers, and maybe Joel, you can stay on for an extra minute or two because there's a lot of tickers in the chat, and we're sorry, we're trying to get to them all. I'm going to go back in the chat a little bit here. Juan was asking about Delta, DAL. Obviously, the airlines were.
How did the Warren buy do?
Yeah, and it was faded too immediately. Delta opened up near the high, straight down. So we poo-pooed that on the show. We said, look, he's got 70 million shares. He bought another 900,000. Yes, it's a vote of confidence, but come on, is that worth 6% more because Warren added 1% to his positions? Come on. Anyway, so it came back down. Airlines are still ground zero. I retweeted somebody's tweet that was going on a flight to Italy and there was nobody on the plane. It was literally empty. So, I mean, there is issues with airlines right now. Some people are definitely scared to fly. You're going to see the airline earnings come down, at least for the current quarter, significantly here. I don't want to own any airlines.
Yeah, wow. Wow, that really came in yesterday. Once again, the importance of, that opening tick, that opening few minutes of trading. A lot of trading systems, algorithms are just basing on an opening price. So something we like to emphasize here on the show. What about Campbell's Soup? You got to think that there's been a big spike in people buying canned food supplies.
Well, their earnings were
and the earnings are out.
Yep, earnings are out this morning, and they not only did they beat, but they raised their earnings, their EPS guidance for the year. I guess.
I mean, Yeah, is this a short-term pop though? Because what Joel's saying, I kind of think it is. I think there's people going out. I bought more canned foods. I filled up my pantry just in case I end up getting quarantined. A lot of other people might be doing the same thing here right now. So short-term, it's good news. Long-term, it's still they make soup. So is this like going to be maybe Costco went up ridiculous though, so it's hard to say.
Yeah.
Costco can go up 30 points on a couple pictures online. People start rumoring that, oh yeah, people are loading up on canned goods. You could see how this could, take off, in the short term. I could see it. So I don't want to be short it, but I'm not chasing up 5.5% either.
They make more than just soup, Dennis. Jeez.
What else do they make?
They make like V8 juice, and
they make canned. Joel's right. Canned goods. We'll put it all under canned goods.
All right,
they're in my pantry right now.
They make bread. They have a lot of breads. All right. Anyway, moving on.
Bread?
Yeah, like they have, they own brands that make bread, like Pepperidge Farms or whatever.
They make a lot.
Oh, really? Okay.
Yeah.
Well, I mean, if you were looking at this stock a couple days ago and you saw it take 43.35, and now you're seeing it up here at 50.50. I don't know. I don't know what your target is out there, people. So if you have a short-term target, pre-market high is 50.73. I'm looking at the monthlies here, and this thing could easily fall back. You had 3 monthly highs, right at 49.50. So there's the 49.50, 50.73 trading range. Dennis, is there any possibility that the book could hold this down for a lower open? It's not a heavily traded stock, but
50?
Yeah,
Possible. I don't have my book open right now.
Okay.
JB Spec, if you're in the chat, is there anything at 50? It's possible, Joel. That's a good call, actually. It's only trade 11,000 shares. I bet there is some size. JV Spec, if he's there. Anyways, I can go and try to open my book too. I just don't have it open here yet. But I bet, there's a possibility there could be some size offered at 50. And what Joel means by that is there's New York orders that aren't active until 9:30, and often institutions will throw them out on the primary exchange. That could hold down the open below 50. So we'll find out if JV Spec's there, or I can go and open my book here just quickly. Could do a few more, not much. JV Spec's there. He says there's not much in CPB. So I guess that's off the table.
All right, a couple more from the chat. Someone had mentioned Home Depot a while back.
upgrade, right?
Yeah.
Yes, it was.
He got an upgrade this morning from Nomura. Gave it a buy rating and a $251 price target.
Here, it's a situation where you understand too. It's upgrades, downgrades. They don't matter as much in this market right now. Like look at Home Depot. It's up 2%. The market's up 2%. I mean, here you are, you get upgraded and you think, oh yeah, it's going to rip. But because the market is up and the market's wild right now, everything just kind of moves together. So if you're buying stocks up 1% when the market's flat because Home Depot's upgraded, I mean, it's a way to lose money right now because upgrades and downgrades aren't as meaningful in this environment right now. They are on the small stuff, but on the mega caps, they're not moving stocks much right now. And the analysts are somewhat quiet here too, and for obvious reasons. I mean, usually Tuesday is one of our biggest days, meaning, Tuesday night and Wednesday morning from analyst perspective. They're quiet. And the reason they're quiet is like what you want to, you're writing a research paper on a company here right now. And you're seeing all this market volatility and you're going to, do it from, just a company perspective. There's a lot of unknowns. What COVID's going to do, you're just going to hold on to that report for a little bit. Maybe you're dotting your I's and crossing your T's for an extra week or two, just to make sure, this market looks like it's stabilized before I throw in that upgrade. So we are seeing some analyst action. But again, the analysts are more quiet than normal right now, and that is because of the market environment that we're in.
JV Spec, what is that? That's only 15,000 at 50.
On Campbell's, yeah, he said there's not much there.
No, Home Depot. It's one of those stores that I go to all the time, and I think my average purchase price is like $9.82. I'm not in there buying like 2x4s. It's hard to turn down the hot dog though when you're walking out of there.
Home Depot's hot dogs? Oh, the hot dog cart?
Yeah. Yep. They're pretty good. I don't even know if they're doing that now, but you haven't hit yesterday's high, and that's what you want to see. You want to see 235.82. The fact that what is your pre-market high? Your pre-market high is 234.74. So pair of highs up there. You had your 4-day high at 234.82, and then the other one at 235.82. So 35.32. I'll call that. You get back up there. I think you see some offers here in Home Depot.
Quick and balanced look before we go.
Sure.
They're big buys. Obviously, market's up substantially, so it's not surprising that there is some substantial buys here this morning. But with that being said, I'll just give you a few highlights. IBM 111,000 to buy. That's an imbalance.
How's IBM doing?
If it gets up near 134, 135, like yesterday's high, I'd be fading it, in my opinion. AT&T 296,000 to buy, Verizon 121,000 to buy, CVS 86,000 to buy. We know healthcare providers too are going to be up substantially. To give you UNH is 49,000 to buy. CI, if you want to look at that one's 10,000, smaller stock, so it's not as significant, but that's still significant for that stock. Almost all buy and balance across the board. House of Mouse, Disney 166,000 to buy. Ugly days for all these stocks yesterday. It's a little kickback rally. These are stocks that I think I would be selling. Disney and the travel stocks on the rally. Do you think they're going to close Disney World?
Yes, I do.
I do too. And what's that going to do to the stock? I mean, we talked about this on the pre-market show a couple days ago, but I think eventually Disneyland, California, Disney World, and Florida close temporarily.
I think maybe it doesn't happen until like
we're ways away from that.
Yeah, maybe April or May. But
I don't even know if we're that far. I think in a month, like it's gonna, if they start to spread and we start seeing cases, I think we have 3 down. Do we have 3 in Florida so far? How many in Florida?
I don't know.
There's a few in Florida already, but it starts spreading around. I think that they will temporarily potentially close the parks, and that's not going to be good for these either. I love Disney. I think long term is going to be a buying opportunity. I think you might get a shot eventually. This at $100, and you know what? It gets down to $100. I'm probably going to put in my long term investment account. 118, I think you're early. I don't think this story is over yet. I think you can get another chance just because this is a little bit ground zero too. They've closed China, they've closed Tokyo. I think eventually they're going to close all the parks just because they don't spread.
Yep, and especially think about the summer. It gets warmer, more people travel.
Yeah.
So they'll try to head that off, I think.
I think so too.
Just a prediction. Okay, if you missed any part of our show, you can always give it a rewatch on YouTube or catch our podcast on iTunes, SoundCloud, Stitcher, Spotify, or TuneIn for a free 2-week trial and subsequent discount to Benzinga Pro. It's our real-time news platform. Click on the link in the description of our YouTube video. That'll get you a free 2-week trial and then a discount on the subscription should you choose to keep it. You can always give us a call, 734-494-0246. Email us, premarket@benzinga.com. Thanks to our guest today, Ivan Feinseth, and thanks to all of you in our chats on YouTube and premarket.benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your Wednesday. We'll be back with you tomorrow.